Today's Daily Dose of Market Insights. I'm Kelvin here again. Very good morning. I hope that you guys has a restful and productive weekend. So welcome back to today's Daily Dose and a brand new week and a brand new month. So today will be Monday, the 1st of September 2025. So as usual, before we kickstart our Daily Dose today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monitored Authority of Singapore. All right, so before we jump straight into the technical analysis, which is i.e. the intraday movement or the intraday outlook on those broad-based cross-asset classes, let's have a recap first what has taken shape on Friday, over the weekend, and as well as in today's Asia session before 11 a.m. That's the start of our daily dose in terms of relevant news flow, economic data releases that has a significant impact on the intraday movement of the broad-based cross-asset classes ranging from the FX, the major stock indices, and as well as the two key commodities, gold XAU/USD and West Texas crude oil that we have a frequent coverage. So let's start with last Friday. So we know that last Friday, there was this release of this tier 1 economic data, which is very important data. Why? Because that could potentially influence the US Federal Reserve monetary policy in this upcoming meeting, which is in September this month. And we know that in August, Jackson Hole Symposium, where Fed Chair Powell has started to shift more towards the dovish side, and that created a liquidity expansion in the US potentially. And what we see is that we start to see a firmer US stock prices in the last 2 to 3 weeks on the average, and also a weaker dollar. So on last Friday, we do have this core PCE price index. So core PCE price index is one of the key metrics that the US Federal Reserve monitor to gauge the inflationary trend in the US. So it has much more of a higher importance than that Commerce Department US CPI data. So the core PCE price index that stripped off of the volatile food and energy category or component came in within market expectation. So there's no sudden burst up above market expectation. So market is expecting 2.9% year on year, slightly above 2.8% year on year that was printed in the previous June print, and the actual number came in within expectation. So there's no major surprises, and that causes the US dollar to actually plummet on last Friday over here. So what we could see, this is the date at, that is the point here, the release of the core PCE price index or price data. The price actually came down over here. And what's interesting is that we start to see that the dollar weakened, where the dollar weakened. So, and also within the core PCE price, the core PCE, we call it the PCE report, by the way, the PCE report. Yes, nevertheless, we have the all-important inflation metrics, which is the core PCE pricing that year on year that the Fed monitor. The PCE data also coming two rather important data metrics that we also got to take note is more stating to the health of the US consumer, which is personal income and as well as personal spending month on month. So personal income came in also within expectation at 0.4%, where market is actually assigning this likelihood for the month of July, and it came in right exactly at within on par at 0.4%, and also above the previous June print of 0.3% over here. And what we could have over here is personal spending as well. So personal spending, which is considered as a proxy of retail spending in a way. So personal spending for the month of July, month on month, also grew higher than the previous print of 0.4% that was printed in June, and the previous print was revised upwards higher from previously 0.3%, and that also came in within market consensus of 0.5%. All right, so that actually saw that that means i.e. the US economy, based on the data that we see from personal income and personal spending on the PCE report, is rather resilient. I mean, there is still, we call it lesser probability of a stagflation scenario where we start to see high inflation and slowdown in economic growth. So with that, that actually supports a further potential Fed pivot that is likely to take place in September. That means shifting from a wait and see stance to resume cutting rates, all right, in September. So what we could see in the CME Fed Watch 2, market is assigning a high probability of 88% based on the Fed Funds Futures traders trading activities, extracted from compiled by the CME Fed Watch 2, where they assign a probability chance on whether the Fed would cut by or hold or hike in the next upcoming FOMC meeting. So the next upcoming FOMC meeting is in 17th of September. Current rate is 4.25% to 4.5%, and right now the Fed Funds Futures has assigned a high probability of 88% that the Fed will probably cut by 25 basis point on this 17th of September, which brings down the Fed Funds rate to 4% to 4.25%. All right, so that has been rather constant in the previous day before the release, the previous day and last week at 85%. All right, and if you were to look at the aggregated probability, where we start to see the compilation or the computation of various meeting down the road, what is the probability will be. So what we could see is that on the 29th of October, which is the next meeting after 17th of September, market participants expecting to stand pat after the potential first interest rate hike to come in on 17th of September. Then thereafter, another 25 basis point cut, 77% chance to bring it down to 3.75% to 4% on the last meeting of 2025, which is on the 10th of December 2025 FOMC meeting. So overall, the pendulum still swing towards a Fed that is on the road to kickstarting its interest rate cut cycle again on the 17th of September after being on hold for the entire year so far. So what we could actually be very mindful of will be on the 17th of September as well, because on 7th of September, the FOMC will start to release its latest dot plot. So what is the latest what is the dot plot? So dot plot is actually the latest projection where the Federal Reserve official will give or project where the Fed funds rate will be in this year, end of this year, end of next year, and in the long term. So from there, we could actually have a implied, we call it a pick, whether the Fed, how many potential interest rate cut will the Fed have for next year as well. All right, because from there we could actually deduce that. So if the next dot plot that was released on 17th of September starts to skew towards more of the dovish side, then potentially we may start to see increased bets of interest rate cut going forward into next year as well. So that could be potentially give further downside pressure on the so-called US dollar. And we know that with US interest rate coming down, that also will potentially reduce the holding cost of gold XAU/USD. And we know gold doesn't actually has a fixed income, it's a non-fixed income bearing asset. So gold also rallied strongly on last Friday. And what's interesting for gold over here is that it managed to actually break that range resistance that has been in place since the fresh all-time high on 22nd of April. So let me share with you what do I mean by that. All right. Futures. Okay, so this is the daily chart of spot gold XAU/USD. So what I could see over here is that it's finally broke out this bullish breakout from this complex ascending range triangle since the fresh all-time high area of 22nd of April that previously was kept at this 3,453 over here. All right, so there's a bullish breakout on last Friday, gaining 0.89%, and in today's Asia session, another positive follow through, intraday gain of 0.77%. All right, so all this also in relation with this upcoming Fed dovish pivot. And what's interesting over here is that this upcoming Fed dovish pivot didn't actually created a positive feedback loop on last Friday in the US major stock indices. So the major US stock indices was down on last Friday. The SPX is down negative 0.6%. The Nasdaq is down by negative 0.22%. The Dow Jones down by negative 0.2%. The Russell 2000 down negative 0.5%. But for the entire month of August, all these four major stock indices still managed to close in the green. But on an intraday basis, on last Friday, they were rather weak, dragged down by the Nasdaq 100, which is heavily weighted in the mega cap technology stocks that are centered on the AI team play. So what do I mean by this? So if you look at the FinViz over here, before I jump into the S&P 500 heat map, if you look at the market breadth of the entire US stock market, that means taking into account of the stocks listed on the New York Stock Exchange, stock listed on Nasdaq, and stock listed on Amex. All right, so this is the very comprehensive market breadth on all the stock listed in these three major US stock indices. So if you look at the market breadth, is still rather healthy on last Friday, despite that major stock indices weakness, primarily focusing on the mega cap stocks, technology stocks. So advancing declining issue, there are actually more declining, 53% to 52%. But however, the new high and new low is there are more new 52-week high versus new 52-week low at 75% and 25%. And also another positive market breadth is the percentage of stocks trading above the 50-day moving average. There are more at 60% versus 40%. And also against the key long-term 200-day moving average, there are more stocks trading above it at 55% versus 45% if you take into the very we call it comprehensive data from all the stocks listed on NYSE, Nasdaq, and Amex. So only one market breadth that is weak, but whereas three market breadth metrics is rather positive. All right, so if you look at the heat map of the S&P 500 now, we see a deep rate in the mega cap stocks, especially on the semiconductor sector, with weakness on NVIDIA down by negative 3%, and AMD down negative 3.5%, and we have Broadcom down negative 3.6%. So what causes this weakness on the semiconductor stocks in the US, and as well as the AI juggernaut NVIDIA, which has the biggest market cap inside the S&P 500 and the Nasdaq 100 that causes their weakness on last Friday was competition from China. So China, one of the mega cap stock in China, which is Alibaba. So Alibaba last Friday released its earnings, and its earnings came in below expectation. But what's interesting is that Alibaba US listed shares, BABA, managed to rally by 13%, not on the backdrop of earnings, but rather a positive news flow during the press conference, stating that it has now developed a new chip that is more versatile than older chip, and it's meant to actually serve a broader range of AI inference tasks. So that means, i.e., what it means that over here is that with Alibaba chip right now, and this Alibaba chip processor could be in competition with NVIDIA chip processor. And we know that NVIDIA chip processor, the lower tier, the H20, is being allowed to ship to China market. But however, given localized Alibaba, this new AI chips, it could be a replacement for NVIDIA chips and other US semiconductor chips that is meant for the Chinese market. And also, this AI chip now in testing is being manufactured by a Chinese company rather than TSMC previously, because an earlier Alibaba AI processor was being fabricated by TSMC. So what it means over here is that if this were to gain much more ground going forward, China AI ambitious or initiative will be run by localized China big tech companies like Alibaba, rather than relying on external party, be it in Japan, be it in Taiwan, or be it in the US like NVIDIA. All right, so that actually causes a negative feedback loop back into the US stock market and created a positive feedback loop into the China stock market. So you look at the China stock market right now, the Hang Seng Tech Index, which is those big cap China stocks, technology stock listed on the Hong Kong exchange. Alibaba is one of them. Baidu is one of them. Managed to saw a a current managed to kickstart a current intraday rally on the Hang Seng Tech that is up by 2.4%, and hereby creating also a positive feedback loop into the Hang Seng Index, which is up by 2%, and the HSCEI, which is the H shares listed on the Hong Kong Stock Exchange, which is the much more broader based one that is including non-tech company as well, up by 1.8%, and the localized A share benchmark index that comprises on the Shanghai stocks listed on the Shanghai Exchange and stock listed on the Shenzhen Exchange, up by 0.3%. All right, so that actually explain why the lackluster performance that's being seen on last Friday on the major US stock indices that led to this positive performance on China related stock market led by China big cap technology stocks over here. And also over in China, there is actually some encouraging tier one economic data as well that's being out on Sunday. So let me touch on step by step. Okay, where is it? Yeah, this is the one. All right, so on Sunday, there was this state compiled MBS manufacturing PMI data that comprises more of the bigger corporation in China, usually related to the state, I would say. So for the month of August, it came in better than expected, but still in contractionary territory, 49.4, but it came in much better than expected, 49.5, which is positive. Services PMI compiled by the State Statistical Board, we call it the MBS non-manufacturing PMI for the month of August, continue to be in an expansionary mode within expectation. Okay, market is expecting 50.3. It also came in at 50.3, above 50.1 that was printed in the month of July previously. And in today's Asia session over here, where is it? We have a release of the privately compiled Caixin manufacturing PMI. So Caixin manufacturing PMI is a privately compiled, Caixin, the news paper, the local press in China. They also compile their own manufacturing PMI. So this manufacturing PMI is a bit different from the MBS state manufacturing PMI that was released on Sunday. Caixin manufacturing PMI consists of SME, that means small medium enterprise, that means small privately run corporation. All right, so more privately run corporation, if this manufacturing PMI starts to improve, that means without any state subsidy, it means that the health of the manufacturing sector in China also shows significant improvement as well. That means that it gives us a better gauge of the manufacturing activities in China. So that comprises of SME corporation as well in China. So the Caixin manufacturing PMI actually burst up to an expansionary territory from previous contractionary territory in the month of July, and also surpassed way market expectation that's being assigned to 49.5. So if you look at the Caixin manufacturing PMI, it rose to 50.5 in August, above July level and market consensus of 49.5, making the highest reading since March this year. So if you look at the 3-year trend, it's slowly turning around and shaping a series of higher high and higher low, indicating that manufacturing activities in China is likelihood to be on the brink of recovery. So that also added the positive feedback loop into the China related stock market. All right, so with that, that sum up the first segment of today's daily dose. Now let me move on to the second segment by expanding the screen so that you guys could have a better view of the charts over here. Let's start with the intraday technical outlook on the FX market first. All right, so on the FX market, let's start with the euro dollar. All right, so the euro dollar continues to push higher within our expectation over here. So, but it hasn't cleared above our first resistance level that we have on last Friday, where we have our bullish bias or maintain our bullish bias at 117.30. And what this 117.30 is very important, is very close to the minor swing high area of this pivotal day, where Fed Chair Powell dovish Fed Chair Powell dovish speech during Jackson Hole Symposium on the 22nd of August, and also the minor descending trend line from the 1st of July, the current 52-week high that kept previous bullish push up in check or preventing it from breaking higher. So if you start to see a clear breakout today at 117.30 with an hourly close above it, it actually signified a potential start of a bullish impulsive upmove sequence on the euro dollar. So for now, the pivotal support level still remains the same, which is this minor V-shaped recovery low that has taken shape on last Wednesday or 22nd of August at 115.90, 115.70. So what we could see over here is that the first support level to watch will be a confluence between last Friday minor swing low area upon the release of the core PCE price data, core PCE inflation price data, pardon me, and also confluence very closely with this 20-day and the 50-day moving average, where price action has been trading above it since last Friday. So this level will be at 116.50, 116.50, 16050. Unless we have a clear bullish breakout above 117.30, then I will shift my pivotal support level up for today at 116.50, 1.1650. So for now, levels still remains the same. Next resistance level to watch will be 117.70, followed by 117.90, which is the minor swing high area of 28th of July and 24th of July. Above it sees the current 52-week high at 118.30, which is the minor swing high area of 1st of July. Only a bearish breakdown below 115.70 will invalidate today's bullish bias to see a further slide to revisit the next near-term support level at 115.30 next. So that's for the euro dollar. Right, up next will be the sterling dollar. So the sterling dollar also continues to rise as well, now clearing above this minor descending trend line previously from the that kept previous bullish recovery or push up in check since 1st of July over here. So right now it's actually testing our first resistance level, which was the Fed Chair Dovish speech, ex-post Fed Chair Dovish speech on the previous Friday on the 22nd of August at 135.45. So if we start to see a bullish breakout above 135.45 during the European session today, I will tighten my pivotal support to my first intermediate support level right now at 134.90. So for now, still using the previous pivotal support as my pivotal support for today at 134.45 for now, and we continue to monitor the price action. A bullish breakout thereafter at the European session at above 135.45, I will tighten my pivotal support to 134.90 for today. Next resistance level to watch 135.90 slash 136.10, followed by 136.50 slash 136.80 next on the sterling dollar. Only a bearish breakdown below 134.45 would invalidate today's bullish bias on the sterling dollar to see another round of choppy corrective decline sequence unfolding, retesting the 22nd of August swing low area at 134 figure slash 133.70 on the sterling dollar. Next up will be the Aussie dollar. So the Aussie dollar continues to inch higher as expected, hit our resistance level at 65.40 already. So what we could see over here is that we start to see a bit, okay, we start to see this hourly RSI here starts to shape that bearish divergence, all right? But on the price action continues to be supported by the 50-day moving average over here. Right, so given that the 50-day moving average still holds over here, but with this bearish price divergence that is actually taking shape, so I would be more mindful of my bullish bias for today over here. Just be more mindful because of this bearish divergence. But since price action is managed to still hold above the 50-day moving average and the 20-day moving average since last Friday key exposed risk event data, which was the core PCE price inflation data out for the US, I will still maintain my bullish bias, but with a cautious approach because of this bearish divergence on the hourly RSI. I will tighten my pivotal support level for a risk management perspective to very close to this 50-day moving average over here, and also the former minor swing high area that previously rejected the bulls on 15th of August and 18th of August now turns into a pullback support where the Aussie dollar shaped a minor reversal on last Friday. And if you do the Fibo retracement of this ongoing impulsive up move sequence from the low of 21st of August, it coincides very closely to the 23.6% Fibo retracement. So still maintaining that bullish bias using 65.20 tighten short-term pivotal support for today on the Aussie dollar. Two intermediate resistance level to watch will be 65.60 followed by 65.80, which is the 1.618 Fibo extension taken from the low of 22nd of August that confluence with the minor congestion area of 24th of August and 24th of July and 28th of July. Only a bearish breakdown below 65.20 will invalidate today's bullish bias to see another round of minor corrective decline sequence unfolding, retesting the 20-day moving average at area, and also confluence with this former minor swing high area of 25th of August and 27th of August at 6505/6490. Only a breakdown below 6490 will potentially see a deeper minor corrective pullback unfolding to revisit the last Wednesday minor swing low area at 6470/6460 next. So that's for the Aussie dollar, still maintaining that bullish bias with a tightened short-term pivotal support at 6520. Very quickly, next will be the dollar yen. So the dollar yen continues to remains lackluster, or the boost remains lackluster below that pivotal resistance level, as being congested in this minor sideways range within a medium-term ascending range configuration that is in place since the low of 22nd of April this year. So given that price action hasn't broken down below this minor range support level that has been in place since 14th of August, which is at the 14670/14640 level, and so very close with the 50-day moving average, I don't want to tighten my pivotal resistance to be so tight at the 20-day moving average, which got rejected almost very closely on last Friday at the 14750 level. So for now, still maintaining that pivotal resistance at 148 figure with access at 148.18. Maintain that bearish bias within this range scenario. A breakdown below 14640, then I will tighten my pivotal resistance level to 14750, with the next support level coming in at 14585, followed by the important medium-term ascending range support level at 14550 right now. So 14585 is the minor swing low of 24th of July. However, a bullish breakout above 148.18 would invalidate today's bearish bias to see a squeeze up towards the top of the range at 148.75 in first step, which is the minor swing high of 22nd of April that confluenced very closely to the downward sloping 200-day moving average as well. So that is 148.75 next. All right, if 148.18 is taken out. All right, so that sum up all the major FX dollar pair intraday outlook. Let us move down to the major stock indices, starting with the Hong Kong 33 that is representing the Hang Seng Index. All right, so the Hong Kong 33 burst up as expected, hitting our resistance level at 25,690 almost. All right, so right now we may now start to see a minor pullback taking shape. Why? Because the RSI already starts to exit from the overbought level. But upon exiting from the overbought level, there is no bearish divergence. Price action on the RSI move in line with the price action of the raw price action of the Hong Kong 33, shaping high right in line. So with that, there could be a minor pullback taking shape today. So given that it's hitting the overbought level and exited from the overbought level on the hourly RSI. So first support level to watch will be very close to today's gap up support level, which is today's Asia session low as well, which is 25,430. So 25,430, let me put it better. Okay, I round it up. 25,430 will be my first support level to watch. Maximum will be at this this level here, which is the minor swing high area of 29th of August. Now turns into pullback support and confluence very closely with the rising 20-day moving average as well at 25,260. All right, so 25,260 will be my tighten pivotal support in any minor pullback that I will still have that maintain that bullish bias on the Hong Kong 33 that's representing the Hang Seng Index. After 25,690 will be the next resistance level to watch, will be 25,890, followed by 26,040, which is the 0.764 Fibo extension. Okay, so it's slightly higher, 24,000. 1 second. 120. Okay, 26,120. Okay, 0.764 Fibo extension from the low of 1st of August, and also very close to the upper limit of this ongoing major ascending channel from the low of January 2024. Right. However, a bearish breakdown below 25,260 will invalidate today's bullish bias stance to see the minor corrective pullback unfolding or extending further towards the downside, exposing the next near-term support level at 25,050, followed by the all-important 24,880, which confirms very closely with the minor swing low area of 28th of August, 20th of August, and as well as the lower limit of this medium-term ascending channel from the low of 2nd of June, and as well as conversing very closely with the rising 50-day moving average as well. So that's for the Hong Kong 33. Next up will be the Japan 225 that's representing the Nikkei 225. So given the fact that because the recent rally in the Japan 225 or Nikkei 225, a portion of the rally has also been driven by Japanese technology stocks, regarding also in line with the US AI team play. And given that right now China may also rely less on external party, and we know that Japan and US has a very close calibration in terms of the AI supply chain issue. So with less demand from China on AI chips or AI products services coming out from US, that will also have an indirect negative impact on Japanese semiconductor stocks as well. So that created a negative feedback loop into the Japanese stock market today, where the Nikkei 225 on the cash market is down by -2%. If you look at our CFD index, it's down by -0.56%, given the fact that the Japan 225 CFD index has been trading since was trading during the US session on last Friday. So given that it's now floating down towards this support area at 42,000, which is a psychological level, and 41,760, which is also this minor swing low area of 8th of August. So given that, and also the hourly RSI now has starts to print a bullish divergence. Okay, we start to see a higher low. All right, so indicating that this sell-off may be overdone at this juncture, but given that it's now trading below the 20-day moving average, we will flip to a neutrality stance for now first, neutral between 42,520 and 42,000 figure level / 41,760 level over here. So just put it as 41,760, easier. All right, so neutral between this level. Only a recovery and a bullish breakout above 42,520 will potentially reopen up the scope for the bulls to come back in again. For the next resistance level to watch will be at 43,060 in the first step. However, a bearish breakdown below 41,760 will invalidate today's neutrality stance to open up scope for a much more extension of this ongoing minor corrective decline sequence to unfold, to expose the next near-term support level at 41,540 and even 41,270, 41,070, which is the 0.618 Fibo retracement of that previous up move, taken out from the low of 1st of August all the way up to the high of 18th of August, and also coincide with this rising 50-day moving average as well. So that's for the Japan 225. Next up will be the Germany 30 representing the German DAX. So the Germany 30 continues to slide as intended, and now starts to evolve within this minor descending channel that is in play since the high of minor swing high of 22nd of August. So with that, I will and it now broken below our first support level at 23,990 that we have on last Friday over here. So right now, first resistance level to watch will be very close to this minor descending channel upper limit, which is at 24,055. But I will use a slightly higher level at 24,155, which confluence with the 20-day moving average, and as well as the rejection level on 28th of August over here. So with a tightened short-term pivotal resistance level for the Germany 30 representing the German DAX for today at 24,155, I'll still maintain that bearish bias. Next support level to watch will be at 23,790, which is very close to the minor ascending channel lower limit, and as well as the minor congestion area previously from 4th of August to 5th of August. Below it may expose the next near-term support level at 23,615, which is the lower limit of this minor ascending channel that I drew from the low of 19th of June 2025 low. Only a bullish breakout above 24,155 will invalidate today's bearish bias to see a squeeze up to revisit 24,270 and that important range resistance level where the bulls has been preventing to inch up higher since 18th of August, which is at 24,440. Right, so that's for the Germany 30. Next up will be the major US stock indices. So before we start on the major US stock indices, just have a heads up that today US will be closed for a Labor Day. So the US cash market will be closed for Labor Day holiday in US today. So there will be a lower liquidity potentially trading on the CFD indices, all right, that we have. So with that, let us start with the US Wall Street 30, which is representing the Dow Jones Industrial Average. So US Wall Street 30 continues to trade within a sideways range, managed to actually bounce off for the second time on last Friday, ex-post core US CP inflation data release, which is at the 45,455 level, but can't break up above the current all-time high area at 45,780. So with that, I do not want to tighten my pivotal support to at the 45,455, still maintains the same at the previous all-time high area at 45,100, and also coincide with the lower boundary of this minor ascending channel that is still in place since 1st of August low. So still maintain that bullish bias in any dips for the US Wall Street 30 using 45,100 as my short-term pivotal support level. Unless we have a clear bullish breakout above 45,780, then I will tighten my pivotal support level to 45,455. Next resistance level to watch will be at 46,060, 46,180, which is a Fibo extension cluster level. Only a bearish breakdown below 45,100 will negate the bullish bias to see a further slide of the minor corrective decline to expose the next near-term support levels at 44,900, which coincide with the rising 20-day moving average. Below it may see further weakness towards 44,715, which is the minor swing low area of 14th of August to 22nd of August. So that's for the US Wall Street 30. Next up will be the Dow Jones Industrial. Next up will be the S&P 500, pardon me. So the S&P 500 managed to stage a bounce right exactly at our Titan pivotal support level that we have on last Friday, which is at 6,450 level. So no change, 6,450 level is indeed a pivotal support level. But for today, I will have a first intermediate resistance level to watch, which is at 6,490. So above 6,490 may expose further potential upside for the next resistance level to come in at 6,517 next, which is a Fibo extension cluster level, 6,517. However, a bearish breakdown below 6,450 will negate today's bullish biasness to open up scope for further weakness of this minor corrective decline to extend further to the downside for the next support level to come in at 6,414, which coincide with the rising 20-day moving average and as well 20-day moving average as well, 6,414. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 have a nasty push down below the 20-day moving average, but managed to survive at this former minor pullback of this pullback support area, the dotted green line here of that former minor, the pullback support of this former minor descending trend line from the current all-time high that was drawn previously from the current all-time high at 13th of August, and also at this minor ascending trend line that is in place since 20th of August low. So with that, I will be watching this pivotal support for today at 23,308, which is the former minor swing high on 21st of August. Managed to shape that bounce since 28th of August, then thereafter the price action going to trade above it. So 23,308 will be my pivotal support level to watch out for today on the Nasdaq 100. First intermediate resistance, I'll have a lower level for today, which is at 23,580, which coincide very closely with the 20-day moving average. And also there's this minor support that got broken down on last Friday, where it triggered that 2 hour of steep sell off starting from 9 p.m. Singapore time all the way up to 10 p.m. 11 p.m. Singapore time on last Friday, pardon me. So therefore, this is a kind of a psychological level that the bulls got to overcome in order to see much more pronounced recovery in the Nasdaq 100 on the intraday basis. So above 23,580, potentially seek 23,750 next, which is the minor swing high area of 19th of August and 29th of August. Only a bearish breakdown below 23,308 will negate today's bullish / recovery bias to see a further slide to retest the next near-term support level at 23,144, coincide with the rising 50-day moving average. Below it exposes the medium-term pivotal support zone at 22,960/22,945, which coincide with the upper boundary of the former long-term ascending channel that was taken out since 4th of August, now turns into a pullback support area as well, confluencing with the pivotal support zone at 22,960, 22,940. So that's for the Nasdaq 100. Very quickly will be the commodities market, starting with gold XAU/USD. So gold XAU/USD managed to hit our resistance at 3,450 level over here. So managed to hit I think a 4-month high over here, and now approaching the current all-time high at 3,500 that was printed previously on 22nd of April this year. So with that, very clearly we are in the bullish breakout scenario of this 4-month plus of sideways range configuration. But what's interesting over here is that the hourly RSI hit the overbought level, all right, as we are speaking right now, and there could be a risk of a minor pullback taking shape over here. So minor pullback, first support level will be last Friday minor swing high, now turns into a pullback support at 3,451, which was also our last Friday resistance level. Pivotal support level will be slightly lower at 3,432/3,423, which confluence with the lower limit of this ongoing minor ascending channel that is forming since the low of 22nd of April, and as well as the former minor swing high area of 23rd of July. So maintaining that bullish bias for this ongoing recovery of gold to take shape, and also as well as a fresh impulsive upmove sequence to seek out the fresh all-time high in any form of a pullback in first step first at 3,500. Above 3,500, seek out the next intermediate resistance level defined by Fibo extension cluster at 3,520/3,524. Only a bearish breakdown below 3,423 will invalidate today's bullish bias to see another round of choppy minor corrective decline sequence unfolding, retesting last Friday European session low at 3,405. A breakdown below it see a steeper pullback towards 3,374, which confluence with the minor swing low of 22nd of August, and as well as the rising 20-day moving average. So that's for gold XAU/USD, maintaining that bullish bias. Lastly will be the West Texas crude oil. So the West Texas crude oil continues to shape that negative reaction right exactly at our pivotal resistance that we have on last Friday at 64 figure, despite that so-called lack of visibility of the peace deal between Russia and Ukraine. But nonetheless, from a technical perspective, it doesn't warrant any sign of bullishness yet, given that it can't break above our pivotal resistance at 65 figure level, where we got to respect it. First support level to watch as right now, it will be 64.08 as it's fast approaching it, where we highlighted on last Friday as well. A breakdown below 64.08 exposes further weakness in the first step towards 63.30, and below it sees the all-important support level at 62.5. 62.50, why? Because it got tested 3 times ex-post Putin-Trump meeting previously on the 15th of August, where it tested on 18th of August twice, and as well as 20th of August. However, a bullish breakout above 65 figure level that would invalidate that bearish bias that on West Texas oil to see a squeeze up towards 65.60. Above it, see a much more pronounced mean reversion rebound scenario unfolding towards 66.90, which is the minor swing high area of 6th of August. All right, so that sum up the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today will be a rather quiet US session, as we know that US is closed for today. And what we're going to have over here is only some European data to take note of, where we have 2 key European officials speak, 2 key ECB officials speaking. ECB Schnabel at 8 p.m. Singapore time, and ECB President Lagarde speech at 1:30 a.m. Singapore time. And before the start of our daily dose tomorrow at 11 a.m. at 9:30 a.m. we have a BOJ official Himino speaking that could influence the dollar yen rate and the yen crosses, as in some form the Japan 225. All right, so with that sum up today's daily dose of market insights. I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.